Uh-oh. Joe, we're recording. Good to see you again.
Yeah, you too, Daniel. Thanks for having me and Lauren.
Hi.
So, Lauren asked me what we're going to be talking about today, and
Yeah,
I was about to tell her, and then Mummy took over because you'll be glad to hear that when you gave your talk, you were the first up on stage at the Bristol Bitcoin meetup at the back end of November. And it was a brilliant talk. I really loved it. And
thank
so did my wife, apparently, because she's just pretty much verbatim explained to Lauren what the whole thing was about.
you.
So
Oh, amazing.
it's hitting home. There's proof for you that people in the audience were very impressed and really enjoyed it. And she was trying to explain it to Lauren. And I said, well, we're about to talk to Joe, and the presentation is far too long for you to sit through it. But he might throw a few slides up for you because you got some very cool slides, which I'm
Yeah.
sure she. And maybe you could just give like a 3-4 minute abridged version, like a Michael Saylor 3 minute. You've got 3 minutes.
I
You've got
don't have
three
enough
minutes,
slides
pal.
for that.
Yeah, 44 slides, 3 minutes. Go, do your best, and then Lauren will decide whether our family invests the rest of our. Well, there's nothing left of
Right, there's a lot
it.
there's a lot riding on this, isn't there?
Yes.
Well, you caught me on the hop here,
I
Francis.
told you I was going to surprise you with
Yeah,
something.
well, I just need to make sure I can pull up the actual presentation. Because I presume you want me to share my screen as well?
Yeah.
Just brought me a
Uh,
cup of tea. Keep going.
oh, that would be nice. Black, no sugar, please.
I think it'd be cold by the time it got there. Um, okay, so maybe
Yeah, you have permission to share.
okay,
That's all set up. Good to go.
so let's try this.
Oh, you've got a Morpheus chair in the corner back there, I've just noticed. Is that
Oh,
where you sit when
it is.
family members are over with a pill in each hand?
You know, I haven't tried that. That's one for this Christmas, maybe.
Yeah, when you got
It's
friends over.
it is the most comfortable chair in the world.
All right, here we go,
Right.
Lauren. And do you want to keep time here? 3 minutes?
Uh, why don't we
Well,
keep five?
I, I think
Okay, you're
we'll
going to
do
be
this
lenient. You're
like,
going to she's giving you 5 minutes, mate.
oh my, okay. Well,
Well, that's
you find me
inflation.
out, Lauren, when you've had enough.
She's just
Um,
printed an extra 2 minutes out of nowhere.
Anyways, okay.
that's not very Bitcoin.
Okay, okay,
Um,
go for it.
okay, so Lauren, as this presentation is about Bitcoin without mentioning Bitcoin, but one of the things that I do want to talk to people about to help them understand why Bitcoin is important is to show what happens when you don't adopt things like Bitcoin. But one of those prerequisite things is to understand what happens, what should happen in our lives overall. Whereas, you know, you probably noticed around you that prices every year or more frequently go up in the shops. Things become more expensive as opposed to cheaper. Now, we just take this as for granted that this is just how life is. But in the presentation, I help people build it up from a base level to show that that is actually not the case. The natural state of the world is the opposite of that, where prices go down and quality goes up, as opposed to prices going up and quality going down. And so I'll take you through this slide, and it'll help you, hopefully, at the end of it, understand how a free market with perfect money should work. And a free market means people are free to trade with whoever they want at whatever price they want, without any government interference or interference of any kind. Okay, so imagine there's a bunch of islanders on this desert island, and there's lots of things they can trade with each other, but they are just arrived and have done nothing so far. Okay, so when the islanders first arrive, because they don't have anything, the first priority is just how do they survive on this island. So everybody has to be self-sufficient. So if you're on the island, you'd have to be hunting for your own fish. You'd have to be chopping down your own trees to make logs for the fire and also for building your house. And then you'd have to go and build your own shelter and these other things. But when you're doing that, most of your time is taking up just surviving because you're doing lots of different tasks. And even though you may have access to perfect money, you don't end up trading with many other people because you don't really end up having any spare resources. You haven't managed to cut down much more wood than you actually need, or you haven't been able to catch more fish than you actually need because you're doing lots of things that you may not be particularly good at. And so you have very limited trading. But because everybody on the island has different skills. For example, you may be much better at chopping down wood versus your friend who's much better at fishing. So it would make much more sense if you spent all your time cutting down wood and they spent all their time fishing because they can catch more fish and you can cut down more wood. But not only is there more wood and fish available, but the quality of what you produce is better. Because you're better at cutting down the wood, the finished product is of a higher quality. And so when everyone specializes, prices fall and quality goes up, especially when there are lots of people doing this at the same time. So you might be chopping down wood, but you may also have 4 or 5 friends chopping down wood. Now, if each of you are competing with each other to then sell that wood to everyone that needs the wood, the people who are buying it are going to pay the lowest price possible with the highest quality. So you're incentivized to produce a higher quality output at a lower price. And if you can't do that, fewer people will buy from you. And the people who can will be able to sell more and then be able to reinvest in their processes and further improve to be able to produce more at lower price, but with higher quality. And now, because you are focused on just your area of speciality, it means that you have to trade with people because you can't eat wood. So you have to buy fish from your friend. So you end up selling the wood to buy the fish and selling the wood to pay for the home builder to build your house. So you end up having active trading in the community. So there's a very clear price for all the goods and services, and the price of which the goods and services trade is really just dependent on how much demand there is and how much supply there is. It's a free market for prices. Now, because people continue to innovate, there's always this pressure for lower prices and higher quality. People are always thinking about how can they improve what they're doing. And you can improve it by thinking about your processes and being more efficient. You can improve it by honing your skills to produce a higher output. But you can also improve by investing. So for example, if you're a fisherman, you can catch much more fish if you build a boat. But building a boat takes capital. You need to be able to pay the woodcutter for the logs, pay the shipwright and the carpenter to actually build the ship for you. And then that allows you to catch more fish to increase the quantity and the quality of the fish available. And so in a free market, the people who are most productive and most efficient also are able to take their excess proceeds that they've made from trading and invest in other people and lend it out to other people at fair prices, fair market rate, right? Because no one's stopping you from borrowing or stopping you from lending to further improve their processes. So it drives innovation, which further lowers prices, further increases quality. So in a free market with perfect money, prices go down forever and quality goes up forever. But this isn't just for the people who are most productive. It benefits everybody, everyone in society, because the money itself ends up becoming more valuable. You don't need to speculate or take risk with your money to earn a return. So even those people in society who are less productive or less able to drive productivity increases for everybody else still benefit from this rising quality of living because their money is becoming more valuable, not becoming less valuable over time. So that must be close to the 3 or 4 minute or maybe 5 minute limit. So
yes, very well done. Any questions, Lauren?
Oof, gosh.
I remember actually you were 9 when we had Jeff Booth first come on the show. after his book hit the scene and Bitcoin has picked up on Jeff. Like, who's this guy? You know, deflation, the price of tomorrow, an abundant future. And he said Bitcoin in the book. In one chapter, he said Bitcoin. And the Bitcoin podcasters were after him. You've got to come on the show. You've got to. I remember Kayvan got him on, John got him on, myself, and then boom, he's on the scene. And Jeff has gone on to do incredible things. But in that interview, I remember asking you, and I think Caitlin may as well, may have been here as well. I'm like, well, imagine a future where the cost of everything you want is going to go down and the quality is going to improve. I wish I'd lived that life.
I think I remember you saying that.
Right. Joe and I have had the complete opposite.
Yeah.
The complete opposite. And our parents, well, maybe our parents remember more of a stable time, perhaps when they were kids, but certainly baby boomers have just seen it go absolutely. But they've profited from it because they've held property and other assets, perhaps stocks and equities. But you guys, you need Bitcoin.
Yeah, we're screwed.
The thing is, Lauren, is that you're growing up in an environment where you just think it's normal. And it's the same for me and your dad. Like, it's always been the case for us that things just become less affordable. It's just a question of how quickly they become less affordable. And sometimes it's more quickly and sometimes it's less quickly. But what this shows you is that's not the way it's supposed to be. If you leave people alone and you get out of the way and you let people focus on the things they're good at and allow them to freely trade with each other, you get the exact opposite. And the exact opposite is what is going to drive human flourishing. Right. Sorry, go on.
Sorry, I was just going to say it's division and specialization of labor.
Mm-hmm.
And we have the same thing happens in this family.
Oh, I was going to say.
I generally do a lot of the driving, right? Me and Mummy, we divide our labor because I'm better at specializing at driving and Mummy's better at specializing at baking and cooking or sewing on buttons when it comes off of a shirt, right? It would take me 2 hours to sew a button on. It would take Mummy 10 minutes. But Mummy gets nervous if there's too much traffic and it's dark and it's raining, and I can just nail that and be gone and back in 20 minutes. So we've divided and specialized in our labor to make efficient use of our time. Now, you put that on a macro scale, everybody's able to divide and specialize in their labor. And this is exactly what Joe's talking about. Everybody wins.
That would be nice.
Yeah. And this, sorry, go on, Lauren.
No, I was just gonna say, yeah, that would be nice, but I don't know. Sorry.
That's okay. Did that make sense? The explanation.
Yeah. Both explanations made sense.
Good.
Yeah.
Okay.
Excellent.
Yeah. Well.
All right. Well, thank you. Thank you for your questions. And thanks, Joe. Well done. 5-minute explanation of Austrian economics.
I think he was over by 1 to 2 minutes, but we can let that slide.
Here's another thing. Okay, right, fine. We maybe we'll penalize him. But here's the thing. You just learned something that 20-year-olds at university are not being taught. That's what's crazy about this whole thing. They're being taught the opposite. They're being taught inflation is good for the economy. We need inflation. The Bank of England are our grand masters, and they overlook to make sure there's a minimum of 2% inflation in our economy every year. And all the students are sitting there making notes, nodding their heads. Oh, yes, 2% inflation every year. Make sure economy good. Right. Print money into system. Spurs consumer spending. More people have jobs. Yes, this sounds right. Complete lies. Total nonsense.
Yeah.
So you're already ahead of anybody studying a PhD in economics right now. With Joe's 5-minute presentation. This is how crazy it is.
I would say that slide, the inspiration from that slide was Jeff Booth and his book, and as well as a bunch of the other Bitcoin books. So this presentation, Lauren, is there's nothing that has necessarily just come out of my head in here. This is building on all the wonderful work and the wonderful books that all the Bitcoiners have written. And so if there are any people watching and they haven't read Price of Tomorrow by Jeff Booth, you should absolutely go out and get that book and read it, as well as Principles of Economics by Saif Dean. Both of those contribute to the sensible logic. Like there's nothing there which takes a mental leap. It's just that's how people work. Like there's and to base economics degrees on anything other than human action is just ludicrous, frankly.
Yeah, completely a pseudoscience almost.
Wow. Wow.
Okay. Well, thank you.
Well, thank you for your time and thank you for doing 5-minute slides. Yeah, and thank you. Have a good day. Bye-bye.
Lovely. Thanks, Laura. Bye.
So, Joe, yeah, I was going to ask the inspiration for. I mean, anybody listening will obviously be thinking, "Who the hell's this guy? Where's he come from?" He's clearly very deep down the rabbit hole. Like this, that's easily spotted. And I love it when you do meet Bitcoiners like that, and you already realize, "Oh shit, you're one of us." Where have you been hiding? So,
Yeah.
what's been? Who else has inspired you? I know Lynn. You give Lynn a shout out on the presentation.
Yes, yeah. I mean, I think she is the only Bitcoiner that gets a name drop. I'm pretty sure Hayek would have been a Bitcoiner as well, but he's no longer with us. But yeah, Lynn is amazing, and if everybody should read Broken Money, and I think before reading Broken Money, everyone should watch the 30-minute animation of Broken Money. Because I think that encapsulates the key messages, especially if you are less inclined to understand really how the banking system works. And that next layer down, which Broken Money just fully is just the best book on this. But I realize it's probably not for everybody. But definitely watch the video. So yeah, I've just consumed so much content. It's like you do it since 2020.
Right.
It's
So let's back up then. You're just bouncing along in your fiat job, happy. I think you'd when we chatted before, originally in Prague. Well, you tell us. So I won't put words in your mouth. But I do believe you were working in like TradFi, as it's now called. It wasn't called TradFi when we were in it. It was just called like finance.
It's just Fi.
Fi. It was. I work in Fi. Do you like my gilet? So what were you doing?
No, I left before the gilet phase.
Right.
But yeah, I spent the first 10 years of my career working in the big investment banks as an equity derivatives trader, having done physics at university, which was a wonderful grounding in going from a very structured university career, but without that feedback loop, being in a work environment. That transition from university life to work life is like get hit by a bus. Like it's
so when you're studying physics, I assume that's because you just loved the subject, loved numbers, loved
yeah.
So, but was that's not a direct route into the world of finance? So something must have happened during that 4 years.
Yeah, I love numbers come very naturally, and I always loved physics because it's incredibly logical, but then it allows you to sort of infer things as well from observation. And so yeah, I toyed with doing economics, which I'm very glad I didn't now at university, but I just loved doing physics. So I knew fairly quickly I wasn't going to be a physicist. I don't want to be underground all day doing those things. But I love sports, I love maths, and I like solving problems. I always like winning, and so it's hard to win at physics. You know, it's like, um, but we're like winning, not just like winning for winning's sake. Like, so we'll play a board game or something like that. I don't care if I win or lose. It's more just um, when it's using your brain to win. That's, where there's a sort of matchup, and difference is very, very small. But to how do you capture an edge in something systematically and do it continuously? And so that's, when I was at uni, I ended up studying a portion of physics called financial physics, which is basically where option theory comes from,
Mm-hmm.
From physics. And so I did this. I was like, oh, this is amazing. So then went into the city to trade derivatives because it sounds strange to go from physics to doing that, but it was rooted in a portion of the curriculum, which just really appealed to me.
Right. So did you go to like a careers day or something, or just start applying? How did you get
No,
your
because
foot in the door?
I just applied. I was, I missed the summer internship window that you get in the second year. So I just applied. Applied to Goldman and Credit Suisse, maybe. But I got the job at Goldman, and about 3 months later, Credit Suisse invited me to an interview. I said, "That's all right, thanks." Yeah, and then so I moved into derivatives, and it was great.
Do you want to explain to those listening what that's like then when you turn up? What year was this?
2004.
2004. Wow.
Yeah,
This is
20 years.
before mobile phone, like, really before smartphones, well before smartphones.
It makes you feel very old, but yes.
It's mad, isn't it? Because
Yeah, it was a very different world.
I entered brokerage rooms in 1995. We didn't even have email. Nobody even had a phone. Everything was done. The only computers there were 3 computers in the room for the details girls who was sending out the confirmed trades. I mean, this was spot dollar mark in 1995 in Tokyo, and everything was being recorded. It was microphones and speaker boxes. Everything was being recorded on big tapes, like the big round things with the actual tape.
Yeah.
And I would have to go back if there was ever a trade fuck up or a discrepancy. Because I was the trainee getting the coffees, doing all this, I would come up with like armfuls of lunches and breakfasts and start handing this out. And somebody would, listen back about 5 minutes. Credit Suisse bought 25 million from Bank of America. I need to know, what was the rate? What was the rate? And I'd have to go back and listen to these tapes. And it was crazy. And the only screens in the room were 4 television screens, just basically showing different currency pairs. That was it. Like, that was the level of technology. So you get there in 2004, at least you'd have a computer and an email address, and perhaps
Yeah, I mean, it was slightly further on from that, but still, yeah, I wonder what it's like on the trading floor today. It's been 10 years since I was there last. I assume it's gone a bit further, but we had, the live speaker boxes with all the broker channels on. So, I could be showing prices in the broker market and things, as well as, service and sales people as they came in with, either by phone or verbally, but mostly by, RFQs would just pop up. So this client wants this price, these are the details. And then based on where everything is, and you show a two-way price, where you're buying, where you're happy to sell. And then you find out whether the customer wants to do anything.
And this was equity options, you
But
said?
in competition with everyone else as well,
Yeah,
all
exactly.
the other banks.
And this was equity options.
Yeah, so it was index. So I was primarily trading the DAX, which is the German national index, like the FTSE or the S&P 500, but just for Germany, as well as some of the other Eurozone stuff.
Mainly. So how deep then did this get into quantum? They're called quants, right? A lot of these guys at the banks now.
Yeah, well, so we'd have it was really Goldman that pioneered the they were called strats or strategists originally, I think, at Goldman, but they effectively quants who would have a very strong mathematical background, but typically some element of programming as well. And then you would have the trading teams and the salespeople as being the client facing or risk facing, and then the quants underneath helping to iterate, build the models, iterate the models with the input of the traders. But most of the traders were from maths or physics or engineering backgrounds, so they had that core grasp of what it is, what these things were, and so could then talk to the quants and the strategists in a common language, which is probably not the same between the salespeople and the quants, for example, because it's different skill set. But yeah, it was a great learning experience, and it was very stressful, as you can imagine, like going through financial crisis and things like that. But it gave me a fantastic foundation for how to operate in a high pressured, high paced environment where, like you say, attention to detail is incredibly important. Because the downside can be very expensive if you're not.
So 2008 comes around.
Yeah.
How did that work out for you?
It was a crazy time. It was just I funnily enough, it was the first time, like the end of 2007 was the first time I got my own book. And that means, I mean, you'll understand what that means, but maybe the viewers won't. But to have a book is like to have a product of responsibility. So I'd be trading the DAX if any customer wanted to trade options or variance swaps or something like this on the German national index, whether it be pension fund, asset manager, hedge fund, whatever. That would be my responsibility and my responsibility alone. Whereas before that, you'd be a junior backing up someone else on one of the other books. So it was, the timing was, before the world fell apart in 2008 was gave me a lot of exposure at a very crucial period of time. Plus, there was some really weird stuff happening in the German index with Volkswagen and Porsche at that time as well, which probably a very small proportion of your audience may remember that. So it was incredibly valuable, but it was just mental. I mean, for about 6-9 months, it just felt non-stop. And you'd be working long hours anyway, but we wouldn't be able to like, run to the bathroom or get some lunch. Like even the junior on the desk, like you say, normally like the most recent grad is the one that runs out and gets the lunch order if things are overwhelming. Like he couldn't even go. He couldn't even go. And so I was going to work every day with a box full of sandwiches that my wife was making for everyone on the desk. Because it's like if the days would go by, like we haven't eaten in days, and I'm taking this big bag of sandwiches every day. And so it was yeah, very, very hectic times just because everyone was panicking. All the customers, all the clients were panicking. Nobody knew most people didn't know their risk.
No.
When banks were failing. Because, and again, it comes back to Bitcoin, it was all OTC.
Yep.
Everyone had these trades written down between each other that only they knew about. And then you don't know if the person you've done the trade against, whether that bank is going to exist tomorrow. Yeah. And if that bank doesn't exist tomorrow, the position that you have against them disappears. And if that disappears, then suddenly your actual risk that you're managing is wildly different from the risk that you see on the screen, but also you don't know which banks are not going to be there. So it was just this state of like total chaos with everybody trying to de-risk as much as possible. But then, through 2009, March 2009 was the sort of the low of the market, and then it came back. But then sort of 5 years, 6 years, it was really just they're going to print a load of money, flood the system with money, all the volatility is going to go out of the market. And it was just a slow decline to boredom, really, where things don't really move very much. Everything becomes increasingly commoditized. Clients are less and less interested because things are not moving around very much anymore. And then it just becomes sort of run of the mill. So yeah. I mean, I've thought more about this probably in the last 24 hours than I have in years. But yeah, very, very glad I'm out of that now. But great foundation for going on and doing other things, because it's a way of thinking, and it develops, sort of injects you with that layer of personal responsibility for what it is you're doing, because there is nowhere to hide.
And this is very important for people to understand when we talk about counterparty risk in Bitcoin space. Like, this is the point. And I remember when the news started hitting the wire, I was at my desk in Singapore. We were on foreign exchange options desks at that point. And shit went absolutely nuts. Couldn't believe it. Could not believe it, what was happening. You know, these banks, these names that were being, just tossed onto the heap, like Lehman, gone. You're like, what? And I would be talking to like my customers, like, man, like, what the fuck? Like, what now happens to your position with all of these strikes? It's like, I don't know. Like, I don't know. And from the broking side, we went dead for a couple of days because everybody, like you, they were just scrambling to try and figure out their positions. Yeah. And then the news is coming out, Morgan Stanley, Bear Stearns, AIG, nobody knew what was going to be going on. And there were no prices, no liquidity was coming into the market on the brokerage side because everybody was so busy, like you said, trying to figure out, what's the P&L? Where's the risk? And then London come in, and then New York come in, and what? And nobody knows what the hell to do. Then when it did start picking up, that's when it got crazy busy for us, because when people started realizing where their risk was really lying, and they've got to get like, $500 million of 1 week strikes completely cleared out. And at that point as well, I do remember you break in a fair amount of rules within the market because you quote a price with names on it. You're not supposed to do that, but the customers were saying to us, I can't deal with half these names. Like, my risk manager will not let me. I cannot accept AIG. I cannot accept, like, a lot of people weren't accepting Japanese names.
Yeah.
Like, so we also almost had a two-tiered market.
Yeah.
Some prices would be inverted, because there was a Japanese bidder and a Western offer. We might be 9896 on 1 month yen. Like, what? This is nonsense. Like, how is this happening? But because people were so like up in the air of where this,
and for our viewers there, Princey. So just to make it super clear, what we're saying there is, in these markets, we would typically trade bank to bank. It wouldn't go through an exchange. And so you'd have effectively a legal contract between your bank and someone else's bank for the risk. Now, depending on whether that person is actually going to be there at the end of the day, means the value of that contract is potentially very different. And so the traders in these banks would be under instructions to not don't trade with any French banks, or don't trade with such and such, because they have been told that we're worried about their credit risk, for example. And so, you'd end up with these totally skewed markets, or people that just couldn't trade with each other.
But of course, that did create
trade with everyone, and we're just making money left, right, and centre.
That created opportunities for people that could trade with those names, right? Because then they could just arbitrage the skewed price.
Yeah, and then wait to see what happens.
It was nuts. It was absolutely crazy. So, counterparty risk. There you go. That is why, if you self-custody your Bitcoin, your counterparty risk are where you put the 12 words. Yeah. You are your counterparty.
Yeah, this was, for our younger viewers, this was like the FTX blow up in TradFi.
Yes. It was just five back in
Just
those
buy.
days. So okay, so you get through that. You spent about 10 years, I think you said, and then on to the next journey.
Yeah, so I started modeling football. I'm a big football fan, soccer fan. So I just tried to, as a bit of fun, see if I could calculate or try and model how the results um, could be represented through maths in football. Which is, I mean, there's much more literature now, but there have been some literature produced at the time uh, about how to create football models for like the scoring rates in games and how the strengths of the one team versus the other team impact each other, and depending on what the score is at any given point in time. But back then there was probably a lack of sophistication in some of the markets around how the bookmakers were actually pricing up these things for people to bet on. And obviously, some markets were much easier to price. You know, if Liverpool versus Man United, for example, every bookmaker in the world has a price on those on that match, and so you don't really need to go and calculate it yourself because you can just copy someone else's price, and it's going to be roughly correct. But as you go down the sort of the liquidity profile into different types of bets in different types of sports or leagues and things like this, sometimes the pricing can become quite ropey from the bookmakers because it's finger in the air job by the person creating the price. And so so I did it for a bit of fun, and then it sort of snowballed into, I wonder if I could actually do this better than the bookmakers, and then testing that hypothesis and then evolving it from there. But I got to a level of confidence with that, which allowed me to step out of banking and then move into sports, because I always loved the comment, like the intersection of sports and maths is like the perfect. I guess for a lot of young guys, especially, would be like a very attractive place to be. And so the fact that I could earn a living trying to build out something in that area as well made it viable for me. So I left, and within a couple of years had found somebody who had followed the same path. He'd been at Morgan Stanley for 15 years, but he was an engineer, but had done the same thing, started modeling football, and then left. And so we ended up getting together, and we had complementary skills, and we decided to build out a quant engineering business where we would create new mathematical models for sports and have them fully automated, and then be able to incorporate different ways of doing things which unlocked certain things. For example, it would allow bookmakers to be able to either create brand new product, be able to price things up that they weren't able to price up before, like contingent things, like two things happening where they're not independent, for example, which often allows more product for their customers to bet on, which makes their shop fuller. It also allows them to have more margin on things like this, but also being able to help customers fill in the black spots, like when they have to take their prices down because they're not sure what's going on. To be able to be the only bookmaker showing a price when everyone else doesn't know what the price is means you get all the volume. It's like coming back to broking, right? The person who makes the price and no one else is willing to price is the one that's going to do the trade. And so there were back then, especially in areas of betting where prices would just disappear if a goal went in, for example, and you wouldn't be able to bet for the next 30 seconds or 60 seconds in football because everyone needs to recalculate what the new prices should be and come on the website. So if you can remove that and put the prices out straight away, then you're the only game in town, and it's a much better experience for your customers. And this was possible across different sports as well. Yeah, mainly cricket actually. But yeah, so we have took these sort of derivatives maths approaches to sports, and so bringing this new inference-driven pricing. And inference-driven, so you might be thinking, well, I'm guessing, Joe, you just looked at all the stats, like who's won the games and how many goals they've won the games by. But we never looked at the stats ever to be able to price up the next game or what's going to happen in the future, which I know sounds like it should be impossible.
Yeah, exactly. Now you've really got me intrigued, because I was thinking you were doing like the whole Moneyball thing and X amount of passes for the left back, X amount of shots on goal. Right. Okay. So
no, because there are people out there doing that.
Yeah.
And you know, for our British football fans, the likes of Brighton, Brentford, the success that those teams have had is built on that type of approach from their founders, from their owners who have come from sports betting backgrounds. Right? It's like the free market thing again. It's like if you're motivated, you'll solve the problem. So these guys understand what drives good results in football at the lowest possible level better than anybody else. Right? And then they're able to harness that. Well, they do it for betting, they make money, and then they go and buy a football club and they replicate that on the pitch. Right? And this is why Brighton and Brentford don't spend very much money, sell players for a lot of money, and do well in the league. Right? It translates very well to that sort of execution. But these sort of prop betting shops, especially in football, because football is super popular the world over, including in Asia. So, you know, high level football, there's tens of millions bet on every game, which means that the prices, the probabilities of team A winning versus team B are very accurate, right? Because it's been influenced by the amount of money being bet on the game. And so if everyone else is out there doing all this legwork to establish the actual best price, there's a huge amount of information just in the price. And so if you have, so what we would do is very similar to derivatives, is that you just observe prices and then infer out what the contributing factors to those prices must be. And so for options and derivatives, for example, like the right to buy something in the future, so a call option, the right but not the obligation. So if I gave you the right but not the obligation to buy MicroStrategy in a year's time, right? Then the value of that is going to be a function of the amount of time you have to exercise that option, the price at which you get to buy relative to the price it is today, the interest rate in the market, whether it pays any dividends, but mainly how volatile it is. And this is, you know, the more volatile it is, the more the option is worth. Right? But if you saw 3 or 4 MicroStrategy option prices, and you had a model that brought these 4 or 5 factors together, you could reverse out what the world must think about these 4 or 5 contributing factors. And once you understand the factors, then you can price up any MicroStrategy option, right? From 3 or 4 of them. And it's the same approach in football. So if, for example, in week 1 of the Premier League, you saw Liverpool versus Everton, Man United versus Man City, and Arsenal, West Ham, you'd see the prices to win each of those games and, you know, how many goals there are. The Liverpool Everton might have the same price as Arsenal versus West Ham. And so if you just appeared out of nowhere and saw those two, you'd be like, okay, well, clearly Liverpool are better than Everton. Sorry, Everton fans. And Arsenal are better than West Ham. But I don't know whether Liverpool are better than Arsenal. Right? So I know the relative strengths, but I don't know anything about the absolute strengths of the teams. But then next week, maybe I've got Liverpool, Man United, and Everton, West Ham, and Arsenal, Man City. And then the next week, I've got a different combination. And so if I can see a handful of prices from a few different games, and I've got a model, then I can reverse engineer out what the world must think about the absolute strengths of all of these teams. And if I can do that, then I can price up any team versus any team without having to even care what country they are, who the players are, any of this stuff, because it's market driven. It's
Market
like
information.
market information, but inferring out something which is hidden information through a complex modeling process. And you do that in football, you do that in cricket. But by doing this, it allows you then to, we specialized in producing outright prices, like what's the chance of someone winning the league or top 4, top 6, or getting relegated, for example. But if I know what the world thinks about every team at any given point in time, you could run this real time, I can then work out what the probabilities are for every single game for the rest of the season, combine them with the results that have already been, and then simulate millions of seasons, and then calculate where all of the teams finished in all of the hypothetical seasons. And then once you've done that, you can work out the probability of the team winning the league or finishing top 6 or getting relegated, etc. And so you then are able to better calculate the season prices based on the match prices week by week, which are super liquid. And so it gives you an idea of that sort of the power of inference in markets. And I really love those sorts of things. And that's what I mean by like winning. It's like, you're creating an edge here, which is through sort of a mental leap, which is not obvious.
So you used the word automated at the beginning here.
Yeah.
This was all going on in the background. This information was being fed in to the model, completely automated, updating everything real time.
Yeah.
Powerful, mate.
Well, this is the power of the internet. I mean, every bookmaker shows prices live on their website for their customers.
So you've got all of that data being streamed in. You've got Betfred, Ladbrokes, Billy Hill, and then globally.
But yeah, any price from anywhere globally, and then you build in mathematical models to run in real time to calculate real time probabilities, and then we end up. This is one of the things that we built, but the others are very similar in terms of like concept. Take information from a very liquid market, transform it in some hidden way to be able to reveal information in a much less liquid market where it's valuable for the bookmakers, so that they're no longer showing the wrong prices in something which is tricky to do, or they can show more prices more consistently because they have confidence around where the prices should be.
Mm-hmm.
And then so we ended up producing software to sell to bookmakers to help them do these things better.
That's awesome, and like there's a nuance here, right? When this started, this conversation, people were probably thinking, "Oh, right, so it's a degen," but you've clearly, I think there's a fine line here between betting and gambling.
Oh yeah, I don't like betting. I don't. I mean, it says I don't enjoy. I don't feel the need to bet. I don't enjoy betting. I like winning.
So betting and gambling are one of the same, or there is a difference, or?
Oh, I would. Okay, I'm using them interchangeably. I don't like to gamble. Right, betting is closer. I guess betting is somewhere between gambling and trading. Right? And it can fall on one side of the line or the other. But it's about identifying an opportunity and then sort of risk weighting that opportunity. And this is Bitcoin. Like when you go through that thought process and you come from this background, and I think this is also why Bitcoin has probably over indexes on like physicists and engineers and things, because it's like logical systems, and then you're evaluating risk as well as part of this. And like you have a lot of people who come from risk taking or risk evaluating backgrounds, because you naturally end up with, holy crap, Bitcoin is just the most asymmetrical trade of all time. And it's just so wildly mispriced. And that's certainly how I entered the Bitcoin
Yes.
space.
Right. So wait. I want to lead up there. Because I want people to understand how you this wasn't just a flash in the pan decision, let's hoon into Bitcoin here. Like, you are clearly somebody that takes a very deep dive into a topic and looks at it every nook and cranny, will build models, mental or software models, both, evaluate those risks. And again, this comes from your training on risk reward analysis, and you go through that. And these were the kind of moments that clicked for me as well when I was starting looking at Bitcoin, but I didn't have your deep level of mathematics or physics, or I certainly am not a coder or an engineer, but it clicked for me because I could see there was an investable asset on the table, not designed by Wall Street. So that's, click number one. Hang on, I can invest this thing and front run all of Wall Street here. And then the rest of my learning came after that. And I become much more sophisticated with the way that I think about it, rather than just let's front run these motherfuckers.
But that's how you came into it, though. You came in with the lens of, this is a asymmetric bet.
Yep.
Where I've got an informational advantage.
Yep.
You didn't come in thinking this is freedom money.
No.
Right. That's where you end up.
Yep.
But you come in, and so you arrive for the I guess you arrive for the money, and you stay for the purpose.
Yeah, exactly. Yeah. So what is it? I heard.
I
don't know whether it's Spetsky's actual quote, but came for the money, stay for the money. I like to think of it that way.
Because, there's that as well.
Yeah, and for those that are missing the nuance there, we believe fiat currencies to be money, and we were just coming for the mad gains, bro. And I'll just, I'll sell for $100,000 and get my Lambo, and no, I'm here for the money now, which is the money. And the difference between currency and money is stark, but you have to go through all of these things first. So you've got your company, you're knee deep in that. You found your thing. You've got physics going on. You've got mathematics going on. You've got engineering, like software development going on, and sport. So you're happy as a pig in shit. How did Bitcoin? You weren't looking for it, right?
Well, it changed a little bit before I found Bitcoin, because that was 2016. I think we started that business, but we were acquired a couple of years later by our biggest customer, and then we ended up spending. I ended up spending until the start of this year working in that business to help scale that and grow that, and it played a small part in the success for that company. But ended up getting further and further away from, I guess, where I'd started. In some respects, I ended up becoming closer with the CFOs and with the founder to help sort of take it almost like a more defensive aspect of the business. Sort of, because we were growing, focusing more on the capital structure, and running M&A for a few years, but that's quite far from solving mathematical problems and growing a small business and capturing edge and these different things. It was what the business needed given the stage of growth. But it got to a point where the business is now so big that it doesn't need me anymore. And there are better people to do the things that I was doing. We've reached that level of specialization now where, it should be the best people doing those particular things, which, has given me the opportunity to now step out and focus entirely on Bitcoin. But during that thing, so in 2020, when the pandemic happened, I ended up listening a lot to Real Vision at the time. I conscious Real Vision has changed quite a bit over those over those 4 years to
Yeah.
where it is today. But back then I found it very, very, very helpful because I was coming from the TradFi background and it just made it very, very accessible. And it was really, that was the first time I really started going down the Bitcoin rabbit hole. But like you, it's very much for the asymmetric trade. But you don't even appreciate the asymmetric nature of the trade until you've just gone further and further down the rabbit hole. Because, and I think we touched on this when we spoke last, but conscious that wasn't recorded, so maybe I'll just to say it again now. But the asymmetric trade, when viewed through the eyes of TradFi, looks amazing. But when you go through if you walk through the one-way door of Bitcoin, and it's all this one-way door, it's like once you've seen it, you can't unsee it. It's like there's no way of going back. But when you've seen it, you understand that when the price goes up, the supply doesn't go up. Like the supply is limited anyway. But like every other asset, when the price goes up, the supply will go up because people look to take profits because they invest in something which is not overvalued. Whereas for this, there is no concept of that within Bitcoin, especially within more seasoned Bitcoins. Like, if you held it 6 months, you'd probably sell a bit because the penny hasn't quite dropped far enough for you to realize that you don't. But once you go through this inflection point, it's like almost like Bitcoin Zen. Like once you reach that point, you just never have enough. There is no price at which you have enough Bitcoin. And so not only is it capped, it's never coming back. The supply is never coming back. And so, and this is what TradFi don't get. They get half of the reason why this thing is going to infinity. They don't get the other half. And I think it's the other half that will end up perhaps being the most shocking because it means that you might end up seeing price behavior on the upside, which makes no sense in a TradFi world.
All your models are broken.
I digressed slightly there, but
all your models are broken. That's
all your models are broken. This is exactly it. And all models are wrong anyway, but they're going to be horribly wrong for all Bitcoin. Yeah.
It's almost as if Bitcoin is redefining the term asymmetrical. Because the way people's minds work is like, right, it's an asymmetrical bet. That means whatever I put in, I'm going to get a lot more out. They're still in that loop thinking of is switching the unit bias, I suppose. You come in, you're still thinking in dollars or pounds or euros, whatever you're using to exchange for Bitcoin, and then you're pricing it in the future at way higher.
Yeah,
and I get that back.
Absolutely, and I found myself saying this same thing several times to friends recently. Is that because the price has gone up, people say, "Oh, are you going to sell some?"
Oh, you're going to shave off some. You're going to shave off some profit, bro.
Yeah, but people ask in a genuine way, or they bought some themselves.
Yeah.
And it's gone up 50%. Maybe I should sell some.
Yep.
That is a very rational question when you're still on the other side of the door. Right? But the way I answer it is, if you were, imagine you were in Lebanon right now, and you were spending all your time trying to fight to get out of your local currency into dollars. And those dollars go up a lot relative to your local currency. Nobody is going to turn around and say, when are you going to take some profits on those dollars and turn them back into the local? You're just not. And it's this mindset. It's this mindset thing. And so for the Lebanese people, it's primarily dollars because the dollars is just a melting ice cube. It's not one that's on fire, right? Whereas for us, it's as we've got a melting ice cube, we need the hardest money. I mean, it's all just relative differences, but it's that that switch in mindset, I think.
Yeah.
Seems to answer the question for them, although, you know, they certainly are not at that point where they view it that way.
So it's funny you bring up Real Vision, because they were definitely a part of my journey as well. But earlier, back in 2015, I think, when they launched,
Oh,
14 or
wow.
15, Grant Williams was a friend of mine from Singapore. So I must have been one of the first dozen subscribers, just to show support. And when they started, I was absolutely enamored with, and I just left the markets. So
You were
to go on our,
still in that mindset.
yeah, I was looking for a store of value. I needed a store
Yeah.
of value. When I'm now unemployed and married with 4 kids, and we're going on this endeavor to travel around the world via the sharing economy, I I needed whatever I'd saved to stay safe, and I'd done the classic mix of bonds and uh, precious metals and funds and whatever else. And Grant told me that he's launching this thing. I'm like, awesome. He's like, yeah, well, this guy called Raoul Pal, never heard of him. I'm like, okay, great. And then the interviews started dropping, the early interviews with Kyle Bass, like an hour and a half long interview with Kyle, and then an hour and a half long interview with Jim Rogers and Mark Hart, and these names that you knew, but you'd never had any more than like a minute and a half CNBC squawk box, just nonsense. And then you had Grant Orwell flying around to these guys, sitting down with them, long form, hour and a half, really well curated, good video quality. And I was just blown away. And I remember going back to Singapore about 6 months after they'd launched and saying, yeah, having a chat with him. This is awesome. I love it. Like, this is amazing. They used to drop the interview every Friday night. It's like, I am waiting for Friday night for you to drop the interview. I can't wait who it's going to be. And we would always talk about markets and stuff. And then I asked him, are you going to do anything about Bitcoin? And he's like, yeah, tune in next month. And then Tour de Mista came on, and then Trace Mayer, and then Wences Cesares. And that was me being yanked into the Bitcoin rabbit hole. And I had Raul on in 2020 before he went full cryptard and really I think the problem there was just the amount of VC backing that they took on, and the VCs wanted to take it in the direction they wanted to take it. And there's too much easy money in crypto, right? So that's where that all kind of fell down. Grant, thankfully, had already kind of left and gone his separate way. And I've had Grant on as well, and Grant's been on Natalie's podcast recently. But yeah, he still is. He's a gold guy. He said he's got some Bitcoin, and I hope he, fingers crossed, has it in cold storage and keeps falling down the rabbit hole himself. I owe them both a lot, and it's just like you said, it's a shame to what it's turned into right now. So you 2020, you're watching Real Vision, you're getting all of this stuff downloaded. You've got podcasts coming online. 2020 was, from 2019 to 2021, what a time for content, books, articles. I mean, the Bitcoin Standard, I think, was 2018. Andy Edstrom's book shortly followed. Knut Svanholm's first book, Breedlove and his articles. GG 21 Lessons, I think, was in 2021. But he'd been writing articles before that. Unbelievable stuff, like a golden period.
Well, we have, I guess some good things to come out of the pandemic. More time for content creation, more time for content consumption. But yeah, it's certainly made coming into the Bitcoin space a lot easier at that point in time. And I think this is one of the key things. It's each year that goes by, it makes it more and more accessible to a greater number of people. And we're still quite a way from making it accessible to everybody. And not just from an understanding perspective, but also certainly in a use case perspective, in a tooling perspective. But the direction of travel is definitely a good one. And the Bitcoin price going up helps for awareness and also for funding for the businesses that want to continue to drive a closing of the gap from the tooling side to the consumer product side as well.
So why did you decide to throw your hat into the ring with a presentation and start touring around meetups and putting yourself out there, giving up your time
Well, I didn't intend to. It was the I was invited to a weekend away with a friend who's also an entrepreneur, and he invited um, a bunch of his friends from around the world. An American guy lives in Portugal, um, but with people coming in from the US, from Canada, a bunch of people from South Africa and Europe as well. And we all went to this weekend away, and I'd never done anything like this because it's like 15 guys come there. We'll talk about interesting stuff. Everybody brings something to talk about, right? And it was sort of co-created content, almost. But it was all focused on like self-improvement. Um, and everybody came with something that was really interesting and personal to them, and like hands down top 5 things I've ever done going on that weekend. But yeah, and like mental stuff as well, like meditation and breathing exercises is just unreal, absolutely unreal. I never knew the body was capable of doing some of this stuff. It could be, I'm getting sidetracked here, but
No, but
this,
please, I love a side rabbit hole. So
honestly,
what breathing exercise were you doing?
um, so I'd always, been aware of like meditation and breathing exercises, but never really ascribed much value to them because they're right on the edges of, I guess, my sort of logic default framework. But because we had this mix of people there, and some of the guys have been doing meditation and breathing exercises for years, and one of them especially was we all laid down in the dark, and then for 45 minutes, one guy led, had some music on, and was talking us through literally just breathing for 45 minutes, but just like this, like for 45 minutes and doing nothing else. It was an unbelievable experience. But mentally, just like on a different plane. I don't know whether it is like oxygen saturation in the body or something like this, but there's a very physical process that happens, and you can feel it like working its way through your limbs.
I've heard it described as being on like psychedelics without taking psychedelics.
Exactly. Exactly. I mean, I've never taken psychedelics either, just to be
No,
clear.
nor have I.
And so
Yeah.
I had no anchor for that comparison, but one of the other guys had, who'd done ayahuasca um, in, in Central South America. And afterwards, he was like, "That's on a par with ayahuasca." It was just amazing.
So were you seeing visions of anything of like,
Um,
past life, future life, crazy stuff? Like what?
it's more like realizations.
Huh.
It's like unlocking that next level of thinking or the things that have never really been clear before to you.
What's the name of it? Do you know what it's called? This
I can't remember. I can't
we'll
remember.
find out. We'll find out.
We'll
Because it
find
sounds
out.
like an interesting rabbit hole.
Yeah,
Right.
I wouldn't do it by yourself.
No.
It took me maybe 10, 15 minutes to come around at the end.
What?
Yeah,
Really?
yeah,
Well, you were just exhausted?
yeah, I was just lying on the floor, just couldn't move. And just, it was like a gradual, um, normalization of the body and the mind, but just so trippy. Um, but I came out of that feeling like just I'd unlocked like the next level of myself. Yeah,
This is
which is an
awesome, mate.
amazing feeling because it's like, oh, okay, now I understand this, I understand this, I understand this, and it's all very, stuff personal to you. And I had other friends there who had experienced it in very, very similar ways. Um, but yeah, thoroughly recommend.
I want to go. Like, this sounds really interesting because I've been people have been leading me down the path of psychedelics, and for whatever reason, it doesn't resonate with me. I don't know what it is within me that doesn't want to. There's probably some kind of deep programming like drugs are bad, you will go to hell or something, whatever. I don't know.
A loss
Some
of control as well, maybe.
sorry.
A loss of control as well, maybe.
Yeah. I fear what's going to go down. Like, what am I going to see up there? Like, what if it's bad? And you don't ever want to go into one of those sessions with fear. Surely that's going to be the worst mindset to ever do anything like that, or nerves. But if you're like, yeah, Princey, lay down with like these other people just in the dark, do some breathing exercises. I can get my head around that. That's cool. That'll be interesting.
I will find out the name of it, and
Yeah.
I'll message you and maybe we can put it in the show notes or
Yeah,
something.
because I'm sure there's practitioners in every city in England, or if not, like not far away. We could even perhaps get a bunch of Bitcoiners together and do a fun weekend. Because I'm sure when you come down, it's like, right, straight down to the bar, lads. Let's compare notes.
But yeah, I mean that would be amazing to do a weekend like that. I mean, I must say that there was no at the weekend there was no like we're on the beers or anything like that. It was jam packed because 15 different topics of talking, you know 15 different unconnected topics, as well
Right.
as we were doing uh like fitness sessions. Like one of the guys was a physio, one of the guys was a personal trainer. So you know it was a very tiring weekend, but
It
amazing.
sounds like a great idea for a Bitcoin weekend, like rabbit hole weekends. Everybody bring a rabbit hole.
Yeah, well, I can't recommend it enough.
So I guess the danger there is though, what if someone turns up with LSD and like, right, everybody, I guess there's no commitment if you don't want to. That would be the wrong ethos, wouldn't it?
Yeah, I mean the nice thing about this is my friend invited, friends he'd had from his whole life. And so, the everyone was a known quantity, and it was very clear, what the ethos of the weekend was. And,
So it's not like we're not all going to go bungee jumping, guys. Don't be silly. Like this. So right, you come round. Were you next up? Is that right? Okay, guys, that was cool. Now Bitcoin presentation over here. Let's go.
Well, yeah. The thing is, I didn't tell them it was a Bitcoin presentation. I
You
just
didn't.
no.
Aha.
No, and I asked my friend not to give it away. Everyone knew that it was just called "What's the Problem," and that was it. And so, as I was going through it, you know, I could see certain faces starting to sort of the penny dropping that I think I know where this might be going. And halfway through, I could have told you who the 2 or 3 Bitcoiners in the rest of the other 15 were. But it was just great. It was great. I think the reason that I created, well, I wanted to be able to talk about Bitcoin, obviously, as my thing, but I couldn't be sure about. I never met anyone else going apart from my friends, so I didn't know where people were in their level of thinking or level of experience or even awareness of Bitcoin. And I'd never been forced to actually commit any thoughts down to paper before. Because most of us just carry it around in our heads, and then we try and orange pill people at every opportunity, but normally in a sort of super unstructured way, and sort of vomiting Bitcoin information at them, which is not necessarily the most effective way of orange pilling people. And so I had to sit down and prepare something, and that forced me to then interrogate, how would I actually explain this? How would I frame this in such a way that it makes it accessible for people? And then once you start down that track and you realize you don't actually know who you're talking to, then you've got to peel it all the way back to make it accessible for everybody. And then, okay, well, if it's accessible for everybody, how do I get them to Bitcoin in 30 minutes? And then that becomes the challenge. And so instead of trying to explain what Bitcoin was, I tried to set the aim as being, when I finish talking, I want them all to want to know what Bitcoin is. And so building that bridge from wherever somebody is, whoever they are, whether they're, an 80-year-old granny or, Lauren, being able to have some mental framework established that they can then understand why this thing is important. They don't have to understand how it works necessarily, but by going through the story, they build up this mental picture. And hopefully people watch the video so they'll understand what this means. But even that the naming of the characters helps reinforce about hard money versus fiat money, and perfect money, and then the deterioration of perfect money by Fiatello and these things, so that they have this natural sense as to what the words really mean because they're attached to the characters without having to tell them, this is this and this is this and this is but I found it was really, really effective. I was blown away by the response, and everyone was just very kind and interested. And I mean, half the guys had wallet of Satoshi within a few hours and sending sats to each other. They started onboarding each other, so I didn't have to do it. Onboarded one guy who then started onboarding other people. They're sending sats around to each other, and most of the others had bought crypto or Bitcoin at some point in the past, and so we're much more au fait with it. But it became pretty clear to me that it was a bit of an unlock from an orange pilling perspective. And so I then came home. I was so excited to give the presentation anyway, because I'd never spoken to anyone in that sort of setting about Bitcoin before. But then I came home and I then did it for a few more people, and I was like, okay, yeah, there's something here. Like, because if you're talking to people who are business minded or entrepreneurial minded, like it may resonate with them for some aspect. But then when I talked to my mother-in-law, who's in her 70s and scared of money, when you do that, and then she's like, okay, I get this, and she's now, I don't think she'll ever own Bitcoin, but she's like, she's supportive of it, is interested in it. We talk about it every time she comes around now. And it's like, okay, well, there's something here. And so despite not having intended to set out to create something rather than just have something to talk about, I came at the other end thinking, right, there's something here, I should do something with it to help orange pill more people. And so iterated it a bit more, and then reached out to the Bristol guys who were running that conference, and Finn very kindly invited me along, took a punt on allowing me to get up on stage with the microphone, having not done it before. But I think that went well, and now I've made it into a video, and so I can now share this with people without having to actually do lots of calls with people one-on-one. Of course, I'm still very happy to do that, and I've learned a lot. I'm very grateful for the time that people's made to give me that one-on-one feedback as well. And I think the presentation's in a much better state because of it. But I just really want as many people to see this as possible. Don't you?
Right. So the video link, we'll put that in the show notes, so people can, once they've listened to this, they can go and grab it and smash that around, and even use it themselves to. You're more than happy to open source this whole thing, right? Anybody can take the presentation and present it, do whatever they want with it.
So well, firstly, this is not a commercial thing for me. It's charitable, and so I've set up the website. The video itself will go on YouTube, it'll be embedded in the website, and I've got the X handles to match the website as well. So the website and the X handle is Sats versus Fiat. So SATS VS FIAT. Sats versus fiat. And it will be published there. People can go on the website, sign up, and we'll send them some information about Bitcoin. If you're a Bitcoiner and you would like to help out, do presentations in schools or universities or anybody, if we get asked to do any of that stuff, and I really hope we will, then yes, as much support from the Bitcoin community as possible to make sure as many people see this as possible. And go and give that presentation to your friends as well. Just get in touch and we'll make it happen.
Excellent, mate. Well done. Really well done. It's been a pleasure to get to know you, and brilliant presentation that you gave. Like I said at the beginning, it went down really, really well, and you made an impression, certainly on my wife, who then had to, she had the confidence to relay what she'd learned, that's the key thing. That's when you know it's working. When you enable somebody else to then spread that message, I think is incredible.
Well, I think stories are very powerful mediums, and this thing is just a story. And the story, it anchors you up front by helping you identify issues in your own life that you don't know where they're coming from, and then through the story you understand exactly where they're coming from, which is the big red button as the money printer that the government has.
Yeah.
And this big red button is the thing we need to take off the governments. Right? But all of that is much easier to remember as a story with the visuals and things like that than to, regurgitate, formal lecture or something like that. So I'm really, really pleased Claire liked it, and hopefully Lauren will want to see it at some point in the future as well. And I really hope that this helps Bitcoiners with their reach out to people they care about. To be able to send this as the thing you send before the Bitcoin standard. Just watch this video if you're interested. I'll send you something, and I would think most people would be interested to then receive something. Is my hope, anyway.
Excellent work, mate. All right, final question. If you had one last orange pill left to give to somebody, who would you give it to and why?
It would probably be Mr. Beast. And you've probably had that before, Daniel. I'm sorry.
A couple of times, but no problem. There's no wrong answer.
Well, we need to broaden the top of the funnel for Bitcoin. And, he has such a reach. And not only the reach, his ethos around this reach is I think a positive one. And bringing in that younger crowd as well, because I think one of the challenges we face within Bitcoin is that it takes time to understand why the system has failed. And some people do get it young, but normally when something has happened or something's happened to someone they know, where it makes it real, most people don't experience anything real until they have some sort of responsibility that they then feel that they need to make some decisions around. And so, we risk losing the younger generations to meme coins and all of that nonsense. And so anything that can anchor Bitcoin as being the real solution, and bump it up that credibility list for young people would be a winner. And Mr. Beast would very much tick that box.
Certainly would. All right. Well, I know he listens to the Once Bitten podcast, so hopefully.
I'm sure he does.
All right, mate. Well, thank you so much. Like I said, I'd
thanks for having me. I've really enjoyed it.
Yeah, it's been great, and thanks for what you've done and what you're going to do and what you're going to continue to do to help people understand Bitcoin. And yeah, look forward to seeing you hopefully in 2025. Maybe you'll be presenting at a conference or something, and who knows?
Well, we've got that Bitcoin weekend, haven't we? So,
Oh, of course, we've got to do our rabbit hole weekend. I guess we should get planning on that.
all right. Thanks,
See
mate.
you, mate. Bye bye.
Bye.